Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. It's the 29th of February and of course it being a leap year, the 29th of February, a monthly expiry of course day for the domestic markets. But during this session, let's take a look at what the global market setup looks like. To start with GIFT Nifty, it is trading higher this morning, indicating a start in the green for the Indian markets. The Asian markets have opened mixed, where Shanghai is up around 1%, Nikkei is down around 0.6%. The US futures did trade lower after cash market ended lower on Wednesday. Dow has ended in the red for third straight session, where Nasdaq did fall around 0.6% and S&P is down around 0.2%. The US key indices are on pace to end the month higher, where Nasdaq S&P did rise up to 5%. Snowflakes did slip around 21% on CEO retirement and weak product revenue guidance for Q1. Talking about the bond yield, the US 10-year yield holds firm near 4.3% as investors await key economic data. And about the energy pack and bullion market, the Brent crude is above $83 a barrel as US crude inventory did rise and OPEC mulls production cut extension. And gold prices did rise above amid steady treasury yields and dollar index. So this is how the trade setup for the global markets this morning looks like. Let us now take a look at the trade setup for today. It's the 29th of February and of course it being a leap year, it's a unique date in itself, but at the same time it being the last Thursday of the month, it's going to be the monthly expiry. The market fell sharply ahead of expiry in the last trading session and in February derivative contract, with the higher highs, higher lows formation is intact on the daily charts. Hence, present weakness could be in line with the new higher bottom of this pattern. Index may take support at 21,800 to 21,700 levels in the coming sessions, while with hurdles on the higher side at 21,200 to 22,200 levels. In the last trading session, Sensex did drop around 790 points to close at 72,306, while Nifty was down around 250 points to close at 21,951 and formed a long bearish candlestick pattern on the daily charts, which has engulfed the last two sessions, bulls and bear candles. The next lower level to be watched are around 21,800 to 21,700 levels, and Nifty has bounced up from near these levels in the past, but a slide below 21,700 could open sharp fall in the near term. Immediate resistance is placed around 22,150 to 22,200 levels. The volatility jumped over 16 mark, which increased the pressure on bulls. The India VIX jumped around 3.83% to 16.3 from 15.7 levels. Considering all of these, let's take a look at the key support and resistance levels for Nifty and Bank Nifty. Nifty is likely to take immediate support at 21,912, followed by 21,838 and 21,719. levels, while on the higher side it may see immediate resistance at 22,152, followed by 22,226 and 22,345 levels. Talking about Bank Nifty, in the last trading session, Bank Nifty was also under pressure, falling below 46,000 mark. The index was down around 625 points to close at 45,963 and formed long bearish candlestick pattern on the daily charts, closing below 10, 21 and 50-day AMAs. Wednesday's selling pressure has pushed the index below the crucial short-term moving average as well. The sentiment appears negative, with the index potentially moving towards 45,700 to 45,300 in the near term. Resistance is positioned at 46,100. For Bank Nifty, it is expected to take support at 45,846, followed by 45,633 and 45,288 levels, while on the higher side, the index may see resistance at 46,535, followed by 46,748 and 47,092 levels. So these are all the important support and resistance levels for both Nifty and Bank Nifty. Let us now take a look at the stocks in news. Reliance Industries is in news as billionaire Mukesh Ambani owned company Viacom18 Media and the Walt Disney Company signed binding definitive agreement to form a joint venture that will combine the business of Viacom18 and Star India. Reliance has agreed to invest 11,500 crore into the joint venture for its growth strategy. The next stock in focus is KSB, as the pumps and valves manufacturer has recorded consolidated net profit at 54.9 crore for quarter ended December 2023, falling 1.8% compared to year-ago period, impacted by weak operating margin. Revenue from operations increased by nearly 15% on a year-on-year basis to 603 crore for the quarter. UPL is another stock in action, as Shriram Finance is going to replace UPL in the Nifty 50 index with effect from 28th of March. Shriram has highest 6 months average free float market capitalization with an eligible universe as a replacement to UPL, the exchange is said. Coal India is another stock in focus, as the state-owned coal mining company has signed a joint venture agreement with BHEL to undertake coal to chemical business. Keep an eye on GPT Healthcare, as the healthcare service provider is set to debut on the bourses on 29th of February. The final issue price has been fixed at 186 rupees per share. ICICI Securities will be in focus, as the Securities and Exchange Board of India has issued an administrative warning to ICICI Securities. The warning has been issued in connection with the inspection of books and records for the merchant banking activities of the company. And last but not the least, keep an eye on PP Fintech, as Insurance Regulatory and Development Authority of India (IRDAI) has granted certificate of registration to Policy Bazaar Insurance Brokers, a wholly owned subsidiary of PB Fintech, to act as composite insurance broker with effect from 28th of February. So this is all the stocks and news one needs to consider for the trading session today. Let us now take a look at the FIIs and DIs data. The foreign institutional investors net sold shares worth rupees 1,879 crore, while domestic institutional investors bought shares worth rupees 1,827 crore on the 20th of February. So this is all in all how the trade setup for today's trading session will look like. Considering all the volatility that is prevailing in the market, yes, the market is volatile and one needs to be very cautious. But irrespective of all of these volatility and market conditions, research is something which will always save you. And we understand research really well. Research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.